Good evening and welcome to episode 41. Good evening to you, Wawi,
Good evening, Mark.
and good evening to our loyal listeners. I hope everyone is doing just fine. It's been a good week. This is your host, Mark Yu,
Wawi Santos.
and welcome to the Mark Yu and Wawi show. So before we proceed, just to recap our episode 40, previous episode, me and Wawi discussed the weekly sentiments in the stock market, the consumer sentiments, Elon Musk buying Twitter, yield curve, and Bink Bag's earnings report. So for listeners who are not aware or just following through, this season we just started our first quarter Wall Street earnings reports. So recently we've been overwhelmed with a lot of reports coming out, including big tech stocks such as Netflix. That's why, it made the news the other day when its stock price crashed because of it's experiencing losses in its subscribers. Before we proceed, just a disclosure: this show is made for sharing information purposes only and not to be considered investment advice. We record once a week. I and Wami are both physical therapists here in the USA with a passion and interest in researching and investing our hard-earned money in the stock market. To our co-workers in the medical field, thank you guys for your hard work. So now we're gonna go on to our weekly sentiment and flows discussion for the AAII, or American Association of Individual Investors. So this is a survey that they conduct once a week just to see what the investors sentiment is, if the stock market is gonna, if they think stock market is gonna go up or down or sideways in the next coming months, at least 6 months. So as of yesterday, oops. So as of yesterday, sentiment is still below 20%. So we haven't been really experiencing any less than 20% bullish sentiment since we started this podcast, which traces back its roots back of May of last year. So back to back teens, 15.8% last week and now 18.9% in terms of bullish sentiments, while bearish sentiments is still above 40%. So bullish sentiment is way down there compared to its historical average. What do you think, Wawi, about this findings that we have?
Well, there's still inflationary fears on people's mind and on the analysts' minds. So that's what's driving the market sentiment at that level, I
Right.
believe.
All this time, we've been seeing the consumer sentiment downgrading or declining month over month. And we haven't really seen, my thoughts are, we haven't really seen the stock market sentiment reflect this until now. So I guess you're right, because of the rising prices everywhere. Um, Even airlines have discussed. Airlines, by the way, have experienced an uptrend in the past couple of days after reporting their earnings and outlook, as they projected. They're gonna have the strongest uh, quarter or demand in their plane tickets moving forward, just because people are been you know saving up and setting aside money to at least enjoy now that we're finally loosening up in terms of mask mandates and lockdowns and stuff. So hopefully that stays the course. But for the volatility part of the market, we're seeing a rise for the past 5 days. For the S&P 500, we're looking at the VIX. It's up 4% since the start of the week. For the volatility index for the Nasdaq, which is the tech sector, is almost up by 20%. So a rocky road for technology stocks within the past 5 days, right, Wawi?
Def- Definitely, yeah. It's hitting the tech sector really hard.
Yes, as we're gonna look into today's performance actually in a little bit. For the past 5 days, the Nasdaq or tech-heavy index is the loser once again. I think it's the same as last week where we experienced the Nasdaq sell-off. So for this week, the past 5 days, Nasdaq is down 3.61%. Oh, my dogs just came inside the house. Sorry about that. Followed by the S&P 500, which is down 1.26%. Dow Jones, interestingly, Huawei, it's up 0.82%. Dow Jones is
Mhm.
made up of at least 30 industrial companies in the stock market, or at least handpicked by stock market strategists. So for today, we're seeing a downtrend of basic materials, commodities, and oil. Interestingly, the energy sector is down 3% today. Um, so we're looking now at the past week. Let's see how it has been for the past week. Real estate and consumer defensive are the outperformers. Meanwhile, communication services, basic materials, and technology are the worst performers. Needless to say, communication services is pulled down heavily by the losses of Netflix. Netflix is
Mhm.
even down today by 5% after the tragic sell off of yesterday of more than 40% or 40 billion market cap has been wiped out in just one day.
Mhm.
Mhm.
Now, how is
Unfortunately,
Twitter
uh,
doing in comparison?
uh,
Let's see.
I think Twitter for today is somehow at least flat, 0.77% up. And for the past week,
Okay.
Twitter, it's about negative 2.65%. Interestingly, it still trades down quite a bit compared to Musk's offer of 53 bucks a share. Currently, it trades around 47 bucks. So some upside there. I think I've read the report that Elon Musk is now at least on his way to get the funding in line. Apollo Global, one of um, what do you call that? Like a Blackstone peer, like
Mhm.
a hedge fund slash just private money, lots of money, dry powder in its coffers, cash coffers, is working with him along with Morgan Stanley. So definitely, it's getting serious. Elon Musk
Mhm.
can definitely, if once he already owns at least 9% of Twitter, so if he tries to at least, because right now, Twitter board already, um, you know, engaged in a poison pill um, approach, whereas they're gonna be flat out just rejecting his offer. Um, anyways, Elon Musk can still buy a lot of shares on the open market just by submitting a tender offer to Twitter's current shareholders at a certain price. So if he succeeds buying at least 51% of the company, then he could start slowing. He could start kicking out the board of directors one by one, if that were
Mhm.
the case. Or if Twitter's board of directors doesn't want to proceed with this kind of like humiliation, if Elon Musk did proceed with a tender offer with the current shareholders, then they're gonna probably settle with Musk with a agreeable price for them for a golden parachute at least before anything else can happen. Well, all of these are just speculation, so it's up in the air.
Yeah, well, looks like the offer from Musk has drawn private equity interests
Mhm.
in participating in that deal.
Yep.
So a lot of people, like you said, Apollo Global for one.
And Morgan Stanley as well are trying to fetch in at least.
Mhm.
Morgan Stanley definitely will probably release some cash to back the deal, but at $43 billion, that's just a huge exposure for one financing firm to take with Elon Musk. I think Elon Musk will at least guarantee 20 billion, I heard, or at least I read. So for since the start of the year, going back to the industry sectors, energy is still the outperforming sector, 32%. And the worst performing sector, none other than technology, 19.31% down. Put call ratio, options market is still elevated at put levels. People are expecting that the market will still head down, which kind of reflects our AAII sentiment survey. Fear and greed. So currently we're at fear 37, whereas a week ago we are at 42. So people are less people are more fearful at this point in time compared to previously.
Mhm.
And so now we're gonna look into fund flows. So interestingly, for the past week, which was reported on April 18th, 3 days ago, US stock funds post biggest weekly outflow in 4 months. So investors are selling out of US stock equity. According to Reuters, investors are spooked by rising yields and fears that impending monetary tightening from Federal Reserve would slow growth. So this is not a good sign, definitely reflected in our current stock market performance and also sentiment surveys. If we're going to look at the sector funds per se, although tech sectors has been really, badly affected by the performance, investors actually exited financial funds worth 1.23 billion in a second straight week of net selling. Meanwhile, consumer staples and utilities obtain inflows. These are the sectors that big Wall Street firms are at least bullish on, especially utilities. And money market funds, which is also known as the cash on the sidelines, also faced net selling of $26.4 billion, which is, kind of says that that people or investors are trying to at least probably stock up, prepare for a rainy day, and
Yeah,
make their money work.
so they're pricing in this rate hike,
Mhm.
and so so for the short term, you should see a lot of this downdraft on the charts.
Right.
Um, with you know with with inflation as the highest risk right now,
Hmm.
um, if the Fed is successful in controlling the inflation, then we should see some improvement in the market sentiment here.
Right.
But we would see that in maybe a month or two
Right. And
after May.
yes, and speaking of the rate hikes, while we Federal Reserve Powell was making waves this afternoon as he said faster removal of policy accommodation is appropriate. So this was just released by Seeking Alpha 1:30 p.m. this afternoon. According to the Federal Reserve Chairman himself, 50 basis point hikes are on the table for the May meeting. So more tightening for sure. And if we're gonna look at the Fed Watch tool, which kind of is a survey among Wall Street experts, what they expect on the coming meeting at May 4th, the target rate probability for 75 basis points to even a 100 basis points, which means 1% point rate hike, is now at 97.1%. So even though Federal Reserve Jerome Powell is saying that 50 basis points or 0.5% increased rate hike is on the table by May, experts are already thinking it should be between 75 to 100 basis
Mhm.
points. 97%, which is astounding. Maybe that's why we're experiencing the sell-off right now as people are trying to figure out like where to probably set aside if the Federal Reserve increases the rate hike too much, then that could affect consumer spending and therefore slow down remarkably US economy and might lead to an eventual, recession, which we don't really like to happen.
Yeah, so he's still somewhat timid about his rate hike statement
Mm,
during the group with the IMF today, saying that he's gonna, you know, he's thinking about doing a 50 basis point rate hike, and then the following month do a 75 basis point hike.
right.
So he's just slowly introducing it, I guess. I
Mhm.
don't know why it's a slow process when looks like the remedy might be a more hawkish increase, like a 0.75 might be needed, as
Right.
suggested by most people.
Right. Like the Wall Street experts. And what's interesting is like right now we're already seeing the reflection of primarily like housing demand is still up there, but mortgage applications, as you and I have discussed on a previous podcast, it's down big numbers, 27%. JP Morgan, I think, and Wells Fargo, 33%. So home buyers are pulling back. So further, that was just a 25 basis point rate hike. So what more of the that Jerome Powell or Federal Reserve decide to apply a 50 basis points? So anything is on the table for sure at this point in time to help ease the runaway inflation that we're currently experiencing. Um,
Mhm.
so this inflation, as a result, also has affected the small business and consumer confidence. Now we're at even lower than the COVID lockdown in terms of sentiments, in terms of businesses, small businesses, and consumer confidence, which isn't a good sign. So NFIB or NFIB, NBER, I'm sorry, National Bureau of Economic Research. Um, Back during the lockdown days, we had to wait for them to release their report, at least like 2 quarters after, to indicate that we already are in recession. Whereas the lockdown has started in March. And then this is just, reminiscing the lockdown days. So the lockdown started in March. NBER officially stated that the US is in recession sometime around July or August, right, Wawi?
Yes.
Like two
Uh-huh.
quarters after. So there's no telling when is the recession actually happening. So it's only in hindsight that we know that we're in recession. So this is kind of like a tricky part right here when you're going to look at the confidence among the consumers and also the employers or the businesses that runs the economy. So we're in a tricky slope at this point in time.
Yeah,
Let's.
so
Mhm.
you have several factors that, came right one after the other.
Mhm.
We're just coming off the COVID pandemic, and then we had the supply chain uh, issue, and
Mhm.
then the Russia-Ukraine war,
Right.
and then the Shanghai, China production shutdown because
The
of
lockdowns. Yes.
the rise in COVID.
Mhm.
Um, so that most recent lockdown in China has affected, the current market. Uh, I don't know. Do you know if they're starting to open up again,
I think
or
they have slowly start. I think the very good benchmark or comparison to use on this is Tesla's factory. So Tesla's factory said that they have slowly reopened, keeping the employees within a like what do you call that? Like a balloon type of environment,
yeah? Well,
or
that's the thing. Tesla sequestered their employees in their factories, so they can continue producing.
right. So I think that's
So
how it is right now in Shanghai, or at least in the major areas of China. Slowly reopening steadily.
so hopefully that would ease some of this issue on the supply side.
Hmm. So this is another chart from Bank of America, largest outflow from equities in 6 weeks. So not only Reuters is reporting about it, but another big investment research firm such as Bank of America also noticed the big outflows coming out of the stock market and stuff. So financial conditions, according to the federal data, it's been tightening, and it's been still going uptrend as of April 15th. So a little bit of tightening here and there, resulting into definitely slowdown in some purchases among consumers. So here's just some of the articles that we're gonna breeze through today. Alibaba among decliners at Didi's woes weigh on Chinese tech stocks. So tech companies are not in a good side of things at this point in time. Alibaba, believe it or not, is back to $85 a share per ADR. So at one point it was at 78. or 73 according to this graph by Seeking Alpha. And uh, during the same day as it touched that area right there, China has released like a supporting statement that they're going to follow the US guidelines, accounting guidelines, so as to prevent any delisting. But there has now not been concrete um, evidence yet that they've started to do so. And what has been initially reported that Didi is going to be, delisted. So Didi is now somewhere. Oh my gosh, $1.71,
Mhm.
down 9% today. So believe it or not, at one point this company was around $13 a share. So if that's the case, then it's not a good sign for Chinese tech companies at this point in time. Baidu is at $115 a share, down 5% today alone. Weibo is down 5%. So it's not a good day for Chinese tech stocks. Tencent is down. Let's see, 5%, 42.51 a share. So not a good day, not a good week. At one point after the Chinese press release, I think Alibaba just shot up 30%. It was up around $115 from $70. And now it has retraced those gains. So next stop, mortgage rates at 5.1%. I don't think this is accurate because even though it's published today, I think I've been seeing reports that 30-year mortgage rates are actually at 5.65%, which is quite high up there, therefore dampening more demand. I mean, pricing out some people out of the market, which because they can no longer afford it. The higher price of the house plus the higher monthly purchase, monthly mortgage payouts.
Mhm. It's amazing how it almost tripled in just 2 quarters.
Yes, and
Interesting.
and I think housing builders, home building stocks have suffered the declines so far this year. I think XHB is their ticker for their ETF. So if we're gonna briefly look into the home builders ETF is XHB. So today it's down 1%. If you're gonna look since the start of the year, it's down 25%. So home builders are not feeling the love either, along with tech. So
Mm.
they're just crushing it on a downside. Tesla. So we're just gonna briefly look at Tesla. So it's making waves, beating Wall Street estimates, incredibly performing group or company led by Elon Musk. Although I myself already have sold my small holdings in Tesla, I believe Huawei is still exposed to it, reaping the
Yeah,
benefits of staying put in the company.
yeah. I still have a high concentration
Hmm.
on Tesla shares, um, which is kind of concerning
Hmm.
um, because of its um, um, exposure to to this volatility. But I'm still bullish because it really hasn't ramped up its business here in Texas and in the factory in Germany.
Right.
I still see it as a technology company.
Hmm.
Um, I could not wait for it to. Well, we're all excited for it to produce the Cybertruck, but well, most people are that
Right.
are following Tesla. But I am more like wanting to see what they're gonna do with their energy solar business
Hmm.
more than anything else. The solar costs of photovoltaic cells are going down. So, but the United States is slow in its adoption. But
Hmm.
um, living here in East Texas, I'm seeing some small businesses um, are slowly starting to ramp up their installation and campaign to install solar panels on roofs here in East
Hmm.
Texas, which is promising.
Yep. They
Um,
don't they don't announce that part of their business that much, right? The solar business.
Yeah, because of the controversy attached to it,
Mhm.
which is still um, part of a lawsuit that's still ongoing.
Right.
Uh, a lot of their focus is on their car production,
Yep.
which is uh, which is what we're seeing right now.
Mhm. Yeah. Analyst Dan Ives, which is a longtime bullish on Tesla,
Mhm,
believes that Tesla will deliver at least 1.5 million units. But it all rests on China, he says, seeing
mhm,
no more shutdowns from this point, and Berlin and Austin ramping according to plan. So all three major production sites need to run according to plan. And it's not that impossible or far from reach, as me Elon Musk have proven time and time again to
mhm.
beat Wall Street estimates successfully.
That's one of my main concern is the factory in China and what will the authoritarian government, you
Mhm.
know, can do if you know how controversial Elon Musk is,
Yep.
and Jack Ma was controversial at one point, and now his company is suffering from, you know, government intervention.
Yep.
So that's my the risk that I am seeing there in China factory. You
Mhm.
know how well he could maintain his status there. I know it's a foreign owned company, but it's the first American company to produce such a big factory there, automotive.
Right.
But you still don't know what the Chinese government may do.
Mhm. That's a good point to take. If you're a shareholder of Tesla, at least you definitely need to be aware of those risks. Blackstone, another one of your companies, Huawei, have
Yeah.
beaten Wall Street estimates, and it looks like they're on their way to achieve $1 trillion in total assets under management, of 41% year over year. That's incredible.
Yeah, I'm not surprised. I was just like um wondered why it took so long for it to to appreciate. I guess not a lot of investors are aware of Blackstone's uh spider web of companies that
Mhm.
and investments all
And
over
they're
the world.
and they were actually reported a couple days ago that they're buying another real estate firm, apartment ACC, I think, and they wanna.
Mhm.
Let's.
They do a lot of that.
I think it's for students' apartment housing, campus housing,
Oh,
student housing owner, American campus communities at $12.8 billion.
okay. Now that explains why ACC went up like 12% a
Mhm.
few days ago. Was it
Yeah,
yesterday or
yeah,
so
the other day.
that's why. Okay,
Mhm.
so I
They're
just didn't
buying it.
catch them. Okay, that makes sense. Which is a good buy. You know,
Mhm.
you know,
So
it's the
according to
largest
Steve,
campus dormitory and housing,
yeah,
ACC.
and according to Chairman CEO Stephen Schwartzman, he says, first quarter represented one of the best in Blackstone's 36-year history, despite an extremely challenging market backdrop. Our flagship strategies delivered significant outperformance for investors, while our powerful platform expansion continued with $50 billion of inflows in the quarter. This
Mhm.
translated once again to exceptional financial results for our shareholders.
Well, I just acquired ACC just maybe a couple of months ago or something, or 3 months ago. Interesting. Thank you for updating me.
No problem. So, lastly, we're going to look at Netflix. So, Netflix suffered an astounding drop in its share price, losing about 40% just yesterday and another 5% today. So yesterday, what happened? So yesterday, they reported a net loss of 200,000 subscribers, whereas they themselves projected that they're gonna gain at least 2 million subscribers, and they also projected that they're gonna lose another 2 million subscribers in the next 3 months. So this is quite alarming, as Netflix is a subscriber growth story. So it's not a good
Yeah.
sign when you are suddenly retracing your expectations because of price changes and competition altogether.
Well, it captured market share by allowing uh, member subscribers to share their access.
Mm-hmm.
And I think there's 100 million
100 million. Yeah,
uh,
that's the number.
yeah, accounts that are shared, and now they're trying to crack down on that. They said so. Um,
And also, they're planning to add some ads and low tier pricing. I think at this point they already hit the high mark in pricing. The ones who want to stick and able to afford to pay for Netflix at that high of a price will stick around. But those who have, discontinued probably would come back in a lower tier or as what they're thinking of. Maybe if they lower the price with some ads, then maybe those who have left, or they could actually prevent more losses as a result. So this isn't quite an adjustment period for an ever growth company, Netflix.
mhm.
Definitely. So this is one good letter. This is the last part of our podcast for today. From none other than the baby Buffett himself, Bill Ackman, Pershing Square. So he released a shareholder yesterday on why they actually dumped Netflix stock. So just a recap, Pershing Square is led by Bill Ackman, who's an incredible investor. Forbes has named him as Baby Buffett. So he bought at least $1 billion worth of shares, Netflix shares, back in January, saying that it's of good value. So in this letter, he says that today we sold our investment in Netflix, which we purchased earlier this year. The loss on our investment reduced Pershing Square Fund's year to date returns by 4 percentage points. Reflecting this loss, Pershing Square funds are down approximately 2% year to date. So let's find the main excuse. Here we go. Yesterday, he said, in response to continued disappointing consumer subscriber growth, Netflix announced that it would modify its subscription only model to be more aggressive in going after non paying customers and to incorporate advertising, an approach that management estimates would take 1 to 2 years to implement. While we believe these business model changes are sensible, it is extremely difficult to predict their impact on the company's long term subscriber growth, future revenues, operating margins, and capital intensity. So it kind of like defeats Bill Ackman's initial investment thesis on the company. That's why he sold out, and he lost a good amount. He invested $1 billion. He lost 400 million as a result, and ended up, just taking the proceeds of whatever's left in hopes that he could invest it on another company, hopefully, to generate returns for his investors.
Netflix is a gigantic company. It's like $96 billion market cap.
Mm-hmm.
So it'll be interesting what will happen to this company. Um, it won't. I won't be surprised if it gets acquired or merged into another of these big tech giants. If it does not, uh, if it's not able to like get over this um, hurdle that they're up against in this
Right.
current market.
I was actually thinking about that. Who can be a possible
Well,
acquirer?
you should, yeah, there would be like Microsoft or
Mhm.
Google that they can swallow up this company.
Google has YouTube though, so it could be a opening case that they would say, "Oh, monopoly." I'm thinking maybe Berkshire. Berkshire.
Ooh,
They have
oh yeah,
one.
that's a good
Yeah,
one.
they have $150 billion in market. I mean, not market, but cash. So $100 billion here, or 110 billion for a safe exit for Reed Hastings. I think that's not far from happening. But if you're gonna look at valuation for the company for Netflix, currently it trades at 20.6 times earnings compared to its peers at 18 times. So still a little overvalued.
Hmm.
Um, for let's say price to sales 3.1 versus its peers at 1.6, still pricey.
Hmm.
So market cap of $155 billion.
Oh,
Mhm.
I am quite behind on that valuation.
And it has a total debt of 16 billion with cash of $6 billion. Well, we're gonna take a look at Google. Let's see. Yeah. Well, I guess Seeking Alpha's valuation is not updated. You're right, Wowie. It's around $97 billion
Okay, okay.
in terms of its market cap. And if we're gonna multiply some premium to that, maybe 20%, maybe maybe Berkshire can offer 120 billion in cash and see if
Mhm.
whether Netflix would bite.
Yeah, yeah. So that's a stronghold right there. Good thing you mentioned Berkshire Hathaway.
Mm.
So in this type of market situation, I think it's good to have Berkshire Hathaway in your portfolio.
Right, value over growth. Currently, at
Mhm,
least so since the start of the year, that's what we've been noticing in our series
mhm.
of recordings, right, Wowie?
Yes. Hmm.
All right. Well, Wowie, do you have any quote for the week for our listeners?
Yeah. So just hang in there. Things will get better over time. We're still in the greatest country in the world, and
Right.
we're still, the leader when it comes to innovation. So,
And we got the Federal Reserve.
oh, yeah, that's another topic.
Yes. Well, Wowie, thank you so much for coming on this evening.
Mhm. Thank you, Mark.
And listeners, that's it for this episode of Mark You and Wowie Show. Send us an email at markyouwowieshow@gmail.com if you have any questions. Remember, build that emergency savings and invest the rest for an abundant retirement. This is Mark You signing out.
And Wawi Santos signing out.